record this. Yeah, and then that's better. Okay, so that's nice to hear from you, Natalia. You're from Ukraine. Welcome to United Kingdom. And how many years have you been living here?
Near 2 years. Like start war, we are here and start our new life here.
You're very much welcome and enjoy your life. And I'd like to congratulate you again choosing AAT. AAT, you see, is the dialogue we say from AAT is a real life accountant. All over the world, AAT accountants are there. You pass AAT level 2, 3, 4, you become an accountant and jump into the real life and work for your livelihood. And it's very respected all over the world. Thank you, Natalia. Coming back to Holly. Hi, Holly. Good to see you. You can unmute yourself. Shall I unmute you? Oh, yep, there you go. Hi.
Hello.
Yes, you're right, Holly.
Yeah, fine, thanks. You?
So are you doing level 2? Any module you have done?
Yeah, I passed the first exam, my second try. I unable to work due to disabilities. So whilst I need to keep my mind going, I decided to have a change of career whilst I've got the time. So I actually do this from home. I am under a training provider and they do have a classroom, but the lady in there is at the same level as me. And she changes the way that I've learned at home on my own. And I don't find it very helpful. So I'm hoping that doing it this way will help me. But I failed my second exam 3 times. So I can't keep paying for it.
No worries, no worries. You will enjoy the lesson and you will pass. I'm telling you. Yeah, you see, we make our lessons enjoyable. At first, you need to love what you study. Yeah. And then you will see, yeah, of course, this is time to time is difficult, it's challenging, but we will make it very easy. So nice to hear from both of you. Also, are you both of you from London or which area?
I'm Portsmouth.
Oh,
I'm from Bournemouth.
Bournemouth. I've been to Bournemouth, not to Portsmouth. I'm from London, North London, Edmonton. Yeah, working with AAT colleges, also with my own college, which is London Educators. I just showed you here, accounting lecture and London Educators. We are of ACCA approved and been teaching AAT many years. So today our topic is, which is bookkeeping control, the second module of AAT level 2. And yeah, I saw many students, they struggle, especially on this one. You see, and next week we'll have another revision class on bookkeeping control. Although last year I had free lesson, free revision classes, which is on my YouTube channel or website available for you people. Did you print it out? It was recommended. If it is not, don't worry about that. Oh, well done. Well done. Brilliant. Enthusiastic students are there. Well done. Good. So a calculator is better to have a calculator with you, although I'm going to use, you can use your mobile phone, but don't take it in the exam. You know, you can't use your mobile phone in the exam day, yeah? Because this is a revision class, we will be focusing straight on the exam. We will be focusing on syllabus as well, yeah? Natalia is here to learn. So definitely I will be explaining easy English, not difficult English, because most of the students are from Europe and other Asian parts. So easy English. You can ask me 2 times, 3 times. If I go a bit fast, you can tell me, Elias, you're going fast. Be a little slower. Okay, straight into the point, because today is bookkeeping control. We'll be talking about bookkeeping control. Yep, this is the second module, level 2. Oops. This is my pen. I forgot to put it on. And now I can write level 2. Yeah, level 2 AAT. Do you know if you pass only bookkeeping transaction, which is module 1, both of you completed it, and bookkeeping transaction, and level 2, paper 2, which is bookkeeping controls or principles of bookkeeping controls. Yeah. So today is all about bookkeeping controls. Let's see the syllabus. You know, only three part of the syllabus you need to master. You're going to pass it. Number 1 is control account. Number 1 is control account. Control. These two chapters basically from BPP book. I'm gonna use BPP world-class materials and which covers the syllabus thoroughly. But you can use any like Osborne is there, Kaplan is there, any other training provider, First Intuition training, whatever you are using, no problem. And I prefer BPP. I've been teaching all these anyway. So this is number one, control account. Yeah. Number one, you need to master 3 types of receivables ledger control account or trade receivables, trade payables, payables ledger control account, and VAT control account. We will be going over in deep detail, yeah? And we'll start from zero, scratch knowledge. Although this is a revision class, we'll start from baby steps, okay? Like how to master receivables ledger, payables ledger, VAT. These are your 3 types of control account. Number one, this is one part of the syllabus. Number 2 is bank reconciliation, this one. This is your part number 2. You need to master bank reconciliation, and it is a very popular job to do all over the world. Bank reconciliation we do in real life accounting. And third is journal. Journal or suspense account. Yeah, journal. So 3 parts. You boom, done. A little bit payment method, which is very easy peasy. Yeah, like cash, credit, CHAPS, BACS, check payment, debit card, credit card, standing order, direct debit. We will be going over in deep detail while covering the course material I gave you. Before start the course material, today I will go over little bit of all this, little, like control account, then bank reconciliation, then you see the suspense account or also the errors. If you master these 3 things, you're definitely gonna get 70% in your exam, right? Yep, and that is a pass mark. Now, let's get into the topic wherever, yeah, I'll start from here. I'll start from here. And then we'll come back to this material in maybe 10-15 minutes time. Yeah, first 10-15 minutes we'll spend on our general knowledge of control account, starting with the control account. 3 types of control account, I told you. Control account. There are 3 types of control account you need to master in your AAT level 2 or even 3 or any accounting you are doing, which is control account, receivables ledger control account, or sales ledger control account are the same thing. Do you agree with me? Yeah, because this is revision. I need to, yeah, I assume you know a little bit already. Receivables ledger and sales ledger is the same thing. Receivables are your customer. Receivables are your customer, and they are your credit customer. So if I draw a trade receivables, guys and girls, all the girls are here. When we do accounting, I'd like to share one more stuff, separate entity concept. Then I start everything. Yeah, this is the father and mother of accounting, separate entity concept. Separate entity concept. If you want to be an accountant, at first you need to get this clear, then move on. What is that? You see, we are going to do receivables ledger control account, payables ledger control account, bank reconciliation. We're going to do income statement. We're going to balance sheet. Oh, those of accounting we're going to do. Who we are accountant. We are accountant. So whenever you do accounting, you may be doing accounting. If you're an accountant of Apple, let's think big company, Apple, A-P-P-L-E, Apple. They said they sell iPhone, Mac, and so on. So let's say you bought some shares of Apple. You are the shareholder of Apple. You're part of owner. So when an accountant doing accounting for Apple, he will always think from Apple's point of view. Whose point of view? Apple's point of view. Like I'm the accountant of Apple. I got 1,000 receivables in my desk, receivables, ledger control, or sales day books, or all these things. I'm the accountant of Apple, so all these are my receivables, Apple's receivables. Yeah. Receivables is separate. Accountant is separate. Another example, like we're going to do in a minute. Like in a sole trader, Apple is a big company. Now let's talk about small company. Let's talk about a corner shop, a pizza shop. Pizza. You own a pizza shop, or saloon could be, or saloon, beauty saloon. That sounds good. Let's give an example of beauty saloon. Yeah, Natalia and Holly run, or just Natalia runs a beauty saloon in Bournemouth. Okay, now, and she's serving and getting money, putting in the drawer, and another customer and serving, getting money, also buying some items, selling, buying non-current asset, taking loan. This is what happens in a real life business, isn't it? And we need to do accounting for that. Now, you never can say that whenever you sell, you don't say, this is my income, Natalia's income. No, say it business's income. Business is separate from the owner. That is the point I want to say. You always think from business point of view. You're selling it, say it business sells. You're buying something, say it business purchasing. Am I understood? Yeah? Like business buying. You bought some non-current asset, what can you buy? You bought a speaker even for your business purpose. So that's your business's asset. Yeah, not your asset. Am I understood? That's the separate entity concept. Business, it's separate from the owner. That is very important in accounting. Yeah. So when you sell on credit to your customer, they are your receivable. Am I understood? Yeah. You're selling goods on credit to your customer. They're your receivables. They will pay you. They may go bankrupt, irrecoverable. You can give them discount. There could be sales return. That's all happening in a receivables ledger. But you must think from your business point of view. Now, then you can purchase on credit. Yeah. Purchase on credit, then payables being created. Yeah. Create payables. So these are your receivables and payables. I'd like to give you a little pro forma, which will be helpful for your bookkeeping control. Trade receivables. If I ask you, again, accountant, I'm doing the accounting, or Natalia is doing accounting. Business is separate from the owner. Owner put money into the business. That is the capital. Owner withdraws money. That's the drawings. Business selling, business buying, business taking loan. All this happening with the business. You think from business point of view. This time, business selling goods on credit to customer. So they're known as trade receivables, also known as sales ledger control accounts. Sales ledger control. Again, little bit control. Control means it's a combination of all the individual subsidiary account. Like Natalia giving service to maybe 50 clients. Of these 50, 5 clients are credit client. Like they are her known person, friends, or old customers, good customers. So maybe Natalia giving credit to Mr. A, Miss A, and then B, then C, then D, then E. You're giving credit means they will pay you later. Am I understood? Yeah, they will pay you later. So these are small t accounts. Yeah, these are known as individual account, subsidiary account. Can you please write it down? Like subsidiary accounts are individual accounts, subsidiary account, yeah? Subsidiary accounts. Subsidiary accounts are individual accounts. Little writing is better while you are in a lesson, little writing. Subsidiary accounts, like they're your trade receivables. I'm testing your knowledge. Is trade receivables is a debit account or credit account? Who knows it? Don't worry about if you got it wrong, yeah? I'll help you. Yeah, then you learn. Receivables, are this debit or credit? You can write down, you can say it. Yeah, unmute and say it. Yeah, so receivables. Think about, is this asset, liability, trade receivables? Yeah, receivables are debit account. Yeah, receivables are debit account. Okay, good. So if it is a debit account, debit on the debit side, if you want to add up, you need to write on the debit side. If you minus, you need to write on the credit side. Yeah. Whenever you are selling, double entry should be good. So to master your double entry, I'd like to show you my YouTube channel here. There are so many videos. Can you see how to remember debit, credit? This one. And also accounting for beginners. Only 4 or 5 minutes, 2 minutes, 4 minutes. Yeah. Watch at your own time. Gonna helpful. Just to show you, you might have heard the name of dead click in your dead click. Yeah. DEAD. No, dead click. CLIC. So that's for to how to remember debit, credit. Also, I have developed another one, PEARLS, pearls. Yeah, like purchase. P means purchase, expense, assets. These are debit items. Yeah, purchase, expense, assets are debit items. And RLS, revenue, liability, and sales are your credit item. And I do have videos maybe somewhere, I don't know, somewhere definitely on Pearls as well. I believe it is here. Yeah, how to remember debit, credit. Another one is debt click, which is very popular in the United Kingdom. D denotes debit, C denotes credit. So expense, assets, and drawings. My handwriting is like like doctors. Yeah, my mom wanted to make me a doctor. I ended up being an accountant. Anyway, expense, assets, and drawings are debit, yeah? And liability, income, and capital. These are your credit items. So some mnemonics are there. You remember debt click or PALS, purchase, expense, assets are debit, revenue, liability, and sales. Revenue means income, credit. This is going to help you. So receivables is a debit account. But I'm coming back to summarize, like when you do double entry, sales, goods sold on credit, sales account credit, then receivables debit. So in a receivables account, you write here, and the detail is sales. Yeah. There could be balance BD, then sales. There could be sales return. There could be discount allowed. Yeah. So once we do individual, like Natalia is giving service to Alison, for example. You gave like worth of £100 services, haircut and nail polishing, whatever. Yeah, £100. She's supposed to give you £100. She didn't give you. So that's your receivables. Nice and easy, yeah? Individual account, £100. Let's assume, let me write real figures, yeah? £100. £100, she will pay you, and there is nothing returned, no discount. Let's assume discount allowed. You gave a little discount, £10 discount. So we're going to do balance CDBD. Which side is bigger? 100 is bigger. We write 100. We write on the other side 100. Take away 10, 90 left over. That's your balance CD, isn't it? And CD becomes balance BD, isn't it? Yeah, balance BD. We are learning so many accounting already. This is balance CD, how to do balance CDBD. Then little earlier, we learned how to remember debit credit. So 90, what do you mean by this 90? Natalia gonna get £90 from Alison. Nice and good, yeah? Similar way from maybe Britannia, she gonna get £30 because you have given worth of £30. And from Camellia, you're gonna get how much? £40. Let's keep it simple. Only 3 customers on credit you have, yeah? So you're going to get 90 from one customer, 30 from one customer, 40 from one customer, yeah? So how much altogether? I trust my calculator, even if it is 2 plus 2. I trust my calculator. I suggest you do so. Make sense? So 90 plus 30 plus 40, the 160, yeah? So 160, you see, when you add up together, right in one account, that is your control account. Am I understood? Yeah. So taking a different color pen, maybe this. So this is your subsidiary account. Yep. Individual. We also call it individual account. Oh my gosh, this is very bright. I'm gonna change the color. Maybe, I don't know. Blue. Okay, blue. Individual. Write it down. Individual account. Also just known as ledger account, also subsidiary account. These are individual. When you add up together, like sales worth of 100, sales worth of 30, sales worth of 40, 170, I'm gonna write here as a sales. Am I understood? Yeah. There is a discount allowed. Discount allowed. Only one person we allowed discount. That's it. That was sweet and simple. We can do balance CDBD. 170 is the biggest side here. Are you understanding? Am I going too fast? Yeah. Is it good? Digestible. Nice and easy. Yeah. Trade receivables, ledger, control. This is a control. What is a control account? When you add up together. All the individual you add up together. That is a control account. Now we can do balance CDBD. Yeah, remaining balance is 160 and BD is 160. What do you mean by that? You were still gonna get £160 from your receivables. Yeah? Yeah. That's your control account, guys and girls. control. Now that is not that so simple. I'm gonna give you a little pro forma. In this here, the pro forma is given because receivables is a debit account. I'm erasing it and I'm giving you a pro forma. What are the maximum items you can expect in a receivables ledger and payables ledger? We're gonna write it down, and VAT account. We'll write it down. Then we'll move into the today's chapter. It could be balance BD, under any amount. Could be credit sales. Credit sales, remember, yeah, receivables and payables are credit sales and purchases. And these are the two popular items on the debit side. What on the credit side? Whatever makes it down, whatever makes your owing down to your customers, from your customers. So sales return. You can make this pro forma if you haven't made it before. You can write it down. Discount allowed. If you give them discount, your receivables goes down, like it happened here. Like Alison was supposed to pay 100, but £10 discount given, so less. Bank, like when they pay you, yeah? Bank means that when they pay you, your bank becomes debit, receivables credit, receivables goes down. Could be irrecoverable. Not every customer is good. Some customers may become bankrupt. Some customers may fly to their own country. Just kidding, yeah. Like I'm from Bangladesh, yeah. So like they fly to India, Bangladesh, and don't give you money. Oh, just kidding. Irrecoverable debt. And these are the item. Contract could be contrasting entry. We'll learn later on maybe. And that's it. You do the total. You'll see this side is bigger mostly. You write same figure here. Take your old items. Remaining figure is balance CD. CD becomes balance BD on the opposite side. That's your trade receivables, people. That's an asset. Payables is a liability. When we buy goods on credit, again, who are we? Again, Natalia, you can think your business or my business. Holly, you can think like any business you're like. Maybe Holly, you are running an accounting firm, yeah, in Postmed. So in accounting firm, when you give services, let's come back to one service business, one manufacturing business, pizza. Let's go back to our pizza shop, corner shop, pizza shop. We most of the pizzas although we sell on cash, but we can buy on credit, isn't it? We can buy on credit, like you buy flowers, you buy oil, you buy, what do we need? We need meat and chicken and all the toppings. We're buying on credit. When we buy on credit, we are liable. We've got to give it to them as a liability account on the credit side, please. Yeah. When liability goes up, I repeat, liability goes up, you write on the credit side. Liability goes down when you pay them. When you get discount, it just go down, you write on the debit side. Yeah, I know you started the accounting journey just maybe a few months back. This debit credit may hurt you a little, but the more you do, the more you concentrate, it'll be better. You see, like I saw accountants learning 5 years, 10 years, accounting is still there. Huh? What is debit? What is credit? It's been, but the more you do, payables is a liability account. Liability is credit. So I bought goods on credit from like flour and oil. So I got to give it to them. It's a liability, it's purchase. Purchase account debit, liability credit, payables credit. Basically, balance BD. Basically, two popular item goes on here. I'll be a little quick here. Balance BD. Oh my gosh, run is only 10 minutes left. Balance BD and credit purchase. Like if I was liable before last month, BD means brought down. Last year, last month, I need bring it down. Also, anything I'm liable this month. Yeah. So on the credit side, when I pay them, my liability goes down. So you write bank. When you get discount received, a liability goes down. What else could be? Purchase return. Yeah. When I return them, I'm no longer liable by that much of amount. Purchase return. And then you do balance CDBD, like total. Your balance CD would be here mostly, and BD would be on the credit side. Remember, regarding balance CDBD, again, I have a very popular video on balance CDBD. Maybe, I don't know, like, yeah, there you go. Can you believe it? 200, more than 202 times. 200K is a very popular balance CDBD. you do how to do balance CDBD. Check it out at your own time. So, but I'm showing you live anyway. Remember, debit account, debit balance BD. Yeah, debit account, debit balance BD. Apart from bank account, all the other debit account, debit balance BD. Credit account, credit balance BD. I'll show you VAT, then we'll jump into the module. VAT account, VAT, guys and girls, VAT goes to HMRC. Yeah, value added tax, dealing with the HMRC. What we do with the VAT, we collect VAT from our customer, give it to government. So it's a liability onto us. Make sense? Yeah, liability. VAT is a liability account. Do remember. So if you want to, if your liability goes up, you write on the credit side. If your liability goes down, you write on the debit side. How it goes up and down? When you sell and collect VAT, that's your liability to give it to the government. When you buy something and give VAT, that's not your liability. That's a deduction in your liability. The liability goes down. So I'm keeping it simple. Income VAT, credit. Would you remember? Income VAT on the credit side, easy peasy, lemon squeezy. Expense VAT on the debit side. Yeah, expense VAT on the debit side. Now, what could be the example? Most of the time, balance brought down from last month or last quarter. So balance BD, and most of the balance BD, this balance BD could be either side, VAT as well. Like if it's the liability on the credit side, it's a like asset, like you're going to get VAT return from the government. It happens very often for overpayment, for mistake, anything could be. So balance BD, that's one thing. Then sales VAT with the cash or credit on the credit side, you're right. And a purchase VAT, because that's an expense, purchase VAT on the debit side. Discount allowed, discount received, even sales return, purchase return. If sales is income, what is sales return? It's opposite, isn't it? Yeah. Sales is income, sales return is opposite. So sales return is an expense. So do you agree with me? Yeah, deduction in the sales, kind of expense. So which side of the VAT account you write? Sales return. Think and tell me. Write me if you want to.
Debit.
Yeah, well done. Brilliant. That's a little bit, you need to participate one by one. Yeah. Sales return. Yeah, that's good. So does purchase return on the other side? Purchase return, isn't it? Boom, boom. Then you do. Acha, let me give you some real figures. Maybe 300, maybe 500. I don't know any figures. I'm putting just 100 and 100. Yeah. And here, less, 200 and 300 and 100. Yeah. How do you do a debit credit? I mean, sorry. Yeah, balance CDBD. You need to check which side is bigger. Clearly, this side is bigger. 5, 6, 7, 8, 9, 10, 1,000. Yeah. 1,000. And we write the same figure, 1,000 here. Take away 2, 5, 600, 400 remaining, isn't it? 400 is your balance CD. And CD becomes balance BD on the opposite side, which is next month first balance BD. I'm asking you a quick question. This 400, is it your liability or asset? Yeah, Natalia, go ahead.
Liability.
Liability. Mohammed joined. Mohammed, welcome. You can participate as well. Yeah, why liability? The simple thing is this on the credit side, that's a liability. Yeah, but it's a conceptually, if you think like, I was liable before by 300, then I collected 500 VAT, so I'm liable by 800, then more liability, yeah. And then when I deducted my VAT expenses, which is like, what do you call it? Expenses, then I found I'm still liable by 400. That's a liability. Okay, I think that's enough of general discussion regarding the control account. So few things you must remember, which is individual account. I showed you. These are your individuals known as subsidiary. 2, 3, 4, 5 subsidiary makes one control account, receivables and payables. Yeah, receivables is an asset, payables is a liability, and VAT is also liability, but that's how we do. Based on this knowledge. And what is a reconciliation? When you see, like, when we added up all this, it make 160. And when we done this one, if you check the video previously, we found 160. That is called reconciliation. It matches. Yeah. And that's our control account. And we are jumping into the what do you call our course for today. I think I have taken long enough time in general discussion. Bank reconciliation and suspense we'll talk about later. Your exam for this module is 1.5 hours. You must get 70% to pass it. And there are 8 tasks. 80 marks are there. And you need to get what? 80 times by 0.7. 56. Only, yeah? 50, only 56. And I will show you today how you're going to get 56 marks. Yep. Until 12:30 we are here. We'll be giving little breaks. So are you ready to start the real tasks for today, which is here? You can say yes, or you can write back to me yes, anything you would like to add up. Are you ready? Yeah, I can see a green signal. Yeah, Natalia, well done. How about Mohammed, I believe. Mohammed?
Yes. Hello, just joined.
Hi.
Yeah, how are you?
Yeah.
How are you, Mr. Elias?
Yeah, thank you. I'm good.
Sorry, I'm a bit late. I just had to take some kids to madrasa or something like that.
No
I just joined. Yeah, I'm a regular user of your videos very well. I've even bought some on Udemy, I think so. I think I've seen it.
Brilliant.
So,
Happy to
thank
help.
you very much. Thank you very much. Thank you.
You're
I'll be a
welcome.
regular one.
Happy to help.
Yeah. Thank you so much.
What I'm gonna
so
do,
much.
you're welcome. I'm gonna mute. Thanks for joining in. Because in 2 minutes time, the lesson, our first this lesson I have designed in 4 modules basically, three basically. Part 1 was general discussion, part 1, which is nearly finishing, 40 minutes. I don't think you need a break. Do you need a break of 5-10 minutes now? No, yeah. So after I will call you back in 2 minutes time again, then we continue, which is part 2 basically. Yeah, part 2 in our video. Part 2, we will be doing this 8 questions. So in part 2, mostly we will finish 4 questions. Yeah, and while doing, we will be learning as well. Yeah, I'll be expecting little answer from you. I'll be expecting a bit engaging. So you must be ready with your pen and paper and calculator here in the part 2. After part 2, I'll give you maybe 10 minutes break. There'll be break of 10 to 15 minutes, whatever it is. Then we'll have our part 3, which is the reminder questions. 8 questions we'll be finishing. While doing the questions, we'll be learning. So any students that are new in the AAT level 2 or old, no problem. It will be enjoyable. There will be learning part and there will be doing part, right? So I'm calling you back. You join in. Yep. Is that okay? Yep. Great. So stay connected. You'll receive, you just join back again, and I'm calling you back again in just 1 minute's time. One question, could you please upload the whole video later? yeah, I will upload so you can get some benefits, but get ready to do the main part, which is this, and yeah, boom. I'm calling you back.